basically is a key difference, which is strata homes. I'm just move on. So for landed and then strata. Of course, over here you can take a screenshot if you want to have some comparison, right? Now, coming back to strata, take note they have very little quantity in Singapore because this is like a new kind of product that emerged in the last 10 to 20 years with people wanting to buy them because there's a demand for this type of homes. And usually developers will buy a huge plot of landed homes and then, or maybe just one gigantic bungalow, tear it down, apply for a strata landed license and rebuild into maybe 8 strata landed. So take note, in Singapore, there are some strata homes that foreigners can buy. Majority foreigners cannot buy. You can only sell back to Singaporeans, and unless a PR or foreigner have LDAU approval. But that's a whole new topic later that I'll share with you. Okay, let me come back to this. So basically, pure landed versus strata home. What we have noticed with the latest research is that there's a gap that has widened significantly. Last time, their gap in PSF was actually very close. But have a look at right now in 2024. And this is the disparity effect that we have always been looking at on a quarterly basis. And thus, if you sign up for PLB webinars, every webinar will help to be able to add value to you. And this gap has widened significantly. It's about $1,000 gap right now between a strata landed versus an inter-terrace in terms of PSF level. But of course, maybe you'll come to me and say, hey, Melvin, PSF is calculated very differently because inter-terrace is calculated based on land. Strata landed is calculated based on strata space. And you are absolutely right. However, in terms of quantum, there's also a difference. So why is this important? Later, I will summarize everything and share with you. Right? Now, let's come back to this. Strata versus resale, there's a $600 gap. And strata versus new launch condo, there's a $1,500 PSF gap. And on the volume ratio, we showed this chart just now. But let's come back to this and we clear it out of the way first. So basically, the stock based on the total strata landed in Singapore is averaging at about 5,000 plus. We couldn't capture everything from real list, but plus minus is about 5,000 plus. And there are some strata homes that falls into a category that foreigners can buy. We actually have 2 articles on our webpage called plbinsights.com, plbinsights.com. Head in, hunt for strata landed. You'll be able to hit on 2 articles. We talk about all the projects in Singapore that are condo status, but have strata homes within it. These are the homes that foreigners can buy. So if you buy them next time, you can sell to foreigners. But a lot of them are actually 99-year strata homes. But majority of strata homes in Singapore are actually freehold and triple 9 years lease. All right. So let's have a look at this gap, and then we'll have a summary later. So what is happening is that if, let's say you look at this, this is basically the pricing of 4-5 betas condos. So based on what is happening now in the overall condo market, new launches is looking at a range of about $2,000 to $2,006 per square foot. Some of the newly TOP condos today, they're asking at about $2,000 to $2,003 per square foot. We think that these two are very close knitted, which is why this year, this will go faster than this. So a lot of buyers will start to think that, hey, I want something brand new. If I can go for a newly TOP, I can get the keys immediately. However, maybe I feel that the PSF level in terms of PSF is too close to some of the launches that's happening right now. Why don't I just wait a little while? I get the key 3 years later, but I get a brand new product by myself. I can go in at about 2,000 or 2,006 PSF. So this will go faster than this. Now, what is happening this year is that these are playing a catch-up game. So a lot of the resale condo owners, they are raising their PSF asking price because in anticipation of rate cuts happening this year, what we think will happen for the next 12 months is that this will start to shift closer to the PSF level of this. Now, when that happens next year, what is going to happen is that, okay, so ignore this first. What is going to happen next year is that because this have inch upward in terms of asking prices, a lot of people will then feel, hey, if I go for a 15, 20-year-old resale condo, might as well I go for either this or this. So my own forecast is that towards the tail end of this year, a lot of the new launch balance unit will start to clear out all the way into 2025. And that will then kickstart the end of the 5-year cycle, which this cycle we're in started from 2021 to 2025, 5 years. And then the next cycle will start from 2026. So let me just go back one slide. Now, this category falls right in the middle. So maybe you'll tell me, hey, Melvin, you can still get inter-terraces between 3.5 million for those single story or 1.5 story inter-terraces, pure landed, freehold, 999 in OCR district, maybe D19, D28 and stuff like that. Yes, you can still get those 3.5, 3.6, but it's dwindling as well. Or you want to go for newer built inter-terraces, they are usually 4.5 million. Developer grade will definitely be about 5 million, 5 or over million. Some even up to 6 million if it's a bigger inter-terrace land size. But this category will then suit the appetite of owners that do not want the maintenance of a pure landed. Why is that so? It is because a lot of these 4 and 5 betas in the new launches segment, they are all in the range of about 3 over million to 4 over $1 million. Similarly for newly TOP, similarly for a lot of big old resale condos, they are also in the range of about 3 over $1 million. So because of this, if you are into this hybrid class of landed, this will start to be absorbed very quickly based on my own research and forecast as well as our research team. So hunt for the range 3.6 to 4.6 million and hunt for freehold or 999. And I'm talking about freehold or 999. Of course, you can get 99 strata landed still for about 2 over million to 3. But I think this is the opportunity that you should go for. And if we look at some of the 4-bedroom new launch lowest quantum, it's already $2.6 million up. And a lot of these are $2.93 million for a lot of the new launches. You look at the 5 betas, minimally $4 million upwards in terms of quantum for new launches. And thus, this will present itself because on a PSF level is $1,000 PSF. But compared to new launches, they are at about 2,000 to 2,006. Compared to TOP projects, they are all asking in the range of about 1,007 all the way to 2,001, 2,002 for some of them. And this will then present itself on a quantum level, which is very similar, but on a PSF level as well, it's going to be very attractive because they are still averaging about $1,000 per square foot. So, and they are all calculating by strata space. So for people who do not like pure landed, strata landed, I think in this season, 2024, first half going to the second half, a lot of things are going to start to clear up. So let's have a look at this as well. Why am I bringing you up this on ABSD 60%? The rationale is because of this. If you are going into, let's say, big quantum condos, I'm not saying that they are no good because let's say you want to go into D10, 11, the king of school district, be very mindful of what you are going into in terms of quantum because in the past, most of these districts are dominated in terms of condominiums by a lot of foreign buyers and investors. Now, the foreign buyers and investors that have already bought and committed, they will never sell their properties because they bought before the 60%. They bought at 30%, 20%. If they sell, they cannot buy back. They have to pay 60% to buy back a property. So they will just continue to stay. They will just continue to rent out, continue to hold as a holiday home. So the bedrock is very stable. Even after this came out, the surprising ripple effect is that there's no fire sale in the market. So it doesn't mean that when there's a cooling measure, there'll be a fire sale because 60% ABSD just has a different kind of behavior overall. But what I'm trying to share is this. If you are buying into a high quantum property in CCR, be very mindful to ensure that our popularity demand 3-5 years later when your kids has finished schooling, you want to sell, you want to move out of that area, you want to move out of this condo to go into a landed or whatever. Take note that a foreigner in the past with $8 million budget, now they can only buy something at 4.8 because after paying 60% ABSD, 3.2 million goes into tax. So they can only afford 4.8, but they are really paying 8 million. So what does this mean? This means that next time, if you want to dispose of your CCR condo, a high quantum one, let's say 8 million, 9 million, the amount of buyers from foreign countries with cash-rich kind of ability, even though they have the cash, but the amount of quantum they can enter is different already. So you need to take note. And could that sprout a question in the sense that maybe why don't I take my $6, $7, $8 million and look for a landed instead? So that could be something that you can discover. So for this particular ABSD 60%, this is my summary, is that look for properties that people can afford and want to buy, especially Singaporeans. All right. Now, let's come back to Strata. So Strata, in terms of summary, is back because as condo PSF rockets, averagely Strata landed is looking at about $1,000 PSF now. This starts to make sense, and I think it will be absorbed. And it is poised to move up in quantum after the current batch has been fully absorbed. And what are the current batches? Basically, at this point, I just did it before today's webinar. Basically, there are 95 freehold 999 strata landed cluster homes in Singapore, which is dwindling already in terms of inventory. This is from Property Guru. Leasehold is still about 153. And this segment, I think, especially those at about 3.5 to 4.5 million, look at them intently if you're already ready to go into the market. Now, let me move on to the next segment before I invite George and Beatrice up. So, we want to talk about the updates on absorption ratio. So, in my last webinar, together with Beatrice, last year, end of Q3, we introduced this new framework that our research team came up with. It's called absorption ratio. What is this? Basically, this is a number to track how fast will a type of property in a certain district be absorbed in the market. That means I'm comparing all the listings on Property Guru in a particular month, vis on vis the transaction volume over a period of time. And we take that in a factoring ratio, and we want to see the speed of absorption, meaning that if I want to buy this type of property, in future, what if I want to exit 3-5 years later? Will this property be easily absorbed in the market? That means how fast can you find a buyer? Or I need to take very long to find a buyer. So basically, go for a property with a future ease of exit. And the reason is because the moment you buy, somehow, someday, you will always want to sell, or you need to sell, or you feel like selling because you're in a different season and different stage. So basically, go for properties with very good absorption ratio. And in summary, basically, the absorption ratio looks like this. So we have about 200 overcharts that has been generated as of 1st of March 2024. These are the latest absorption rate. Basically, what it means is this. The green color portion has a change in absorption ratio. So when it is green, it means that this particular type of property has an increased speed of exit. So as you can see, overall in the whole Singapore, for the whole district, from October 2023 to February 2024, and Strata landed has increased its speed of exit. That means a lot of buyers are absorbing this type of properties off the market, off the inventory, off the listings, right? Terrace houses also has an increase in absorption. That means it is being absorbed very quickly from the market. 5-bedroom condos as well, because people are hunting for large size condos. And then, of course, HDB is all green. HDB is always the winner. There's a lot of absorption for HDB properties.
So moving on to, of course, what we want to be taking a look at is in terms of how landed property can help a family or expand in terms of your overall property portfolio. So I think first up is on this particular landed plot. This is a 2.5 category home. This current owner actually moved from an inter-terrace to a Cat 4. So we're going to take a look at some of the numbers. Great land size, 2,000 square feet for inter-terrace. Just to give some context, inter-terrace starts from at about 1,615 square feet. And for us to have, say, at about 2,000 square feet of land size, I would say that's very comfortable. 2,000 square feet land size allows you to have beautiful airwell in the middle. So that will have a lot of upside as well as plus point, as opposed to some of the other landed homes. 3-story, District 19. District 19 is one of the highest, if not the highest, transaction volume. And of course, when we talk about highest transaction volume, that will naturally help to have a very positive effect in terms of your property price movement. For this current owner, purchased back in 2010 at about $1.75 million, exit at about $4.48 billion with a 6 months rent-free extension. 2232 PSF. So in 14 years, that's about $2.73 million. If you were to put into percentage, 11% per annum. In terms of CAGR, that is about 6.9% CAGR. So I would say overall, the numbers makes quite a good sense. How this allows the buyer to kind of switch to the next plot is that they actually move into a landed detached plot. Great size, good plot width of about 13 meters. Depth is at about 31 meters. With this beautiful elevated view. So I would say in terms of detached land or maybe just landed in general, you hardly have this kind of opening. Yeah, most of the time it is back-to-back facing. So this give off, I would say, a pretty good feel to most of the buyers, and of course naturally have a lot of airflow. So entry price is about $8.308 million. This is almost Cat 4 because it comes with lift that serves to all level. It is naturally bright due to the fact that this is a detached, and you have a total of 8 bedrooms. So that is definitely going to future-proof you. So in terms of your moving costs, again, I think what this owner wants to do is they want to avoid going into the full rebuilding, because if you take a construction loan, that will be at about 3 months SORA plus 2% for most of the local banks. And then, of course, that will add on in terms of the overall price point. So buying to this almost Cat 4, they just do up some simple renovation, almost good to go, seamless transition, and I think that is something that's what the buyer was looking at. So this land plot, purposely buying to this so that it also helps in terms of the future retirement as well as exit. Yeah, so this is I would say case study number 1. Case study number 2 is how this particular family switched from 1 landed to 3 condos. Of course, if let's say today, how this means to you as a homeowner is that potentially your next generation can stand to benefit this, because this land plot, inter-terrace, 2379 square feet. So this is pretty comfortable. In fact, it's quite a good size. This was purchased back in 1991. So I would say the owner had very good vision. They bought into a good size land. Back then it was only at $596,000. I think $596,000 was quite expensive at that point of time. Good land size and the right number of bedrooms, 2-story, 4 bedrooms. So fast forward to today. Oh, this one also have an air well, and I think when we marketed this property, we received a total of 3 offers. So I would say characteristics like this attracted a lot of buyers. And then what the owner do eventually is that they exit at about $4.06 million. The condition that you see right here, this was the same condition for the past 30 over years. The only thing that they did was, of course, the slight extension towards the back, and then some painting work along the way. Otherwise, what you see here is still original condition. So I would say in terms of ROI, that's a very good number, because that is about 17.6% per annum. This is in District 28. So naturally, when we talk about District 28 in terms of the transaction volume, that is not as much as District 19. But again, you have a spillover effect coming from District 19. CAGR is at about 6%. So what the owner did was they split the funds from this inter-terrace that was sold at about $4.06 million, split into the siblings for them to buy into a 4-bedder at RCR, $2.83 million for own say, investment, 2-bedder at about $1.2 million, and then another for their own say at RCR 2.71. So they increased the overall total asset value to be at about $6.74 million. And I think if let's say today you're kind of thinking, hey, should I buy into a landed home? I think potentially a few years down the road, this could be happening to your family as part of the legacy planning. Some of them, if let's say they choose not to stay in the landed home, they can say, okay, maybe when the time comes, I want to sell, and then after that, I split the cash to the kids, and then after that, allow them to kickstart their journey. And then this is essentially what the owner have done. So I would say it's a good switch. Having owned this landed right from the start, had they not go with the decision of buying the landed, I think this definitely would not have taken place. So I would say good vision back then. And if let's say today you're kind of sitting on the fence, I think this is probably a good case study that you can weigh upon. Yeah.
Okay, so the next case study we want to talk about is, so we are seeing a new trend actually on the ground these days. We're seeing young buyers who want to enter into the landed market and actually have the means to do so. So these are young dual income families, no kids. I just learned a new term today.
Yeah. DINK. Dink.
Dink, yeah, I didn't know that was a thing, but yeah, apparently it is. Young buyers, dual income, no kids, strong earning power.
Yep.
So they have got strong income. They have the means to enter the landed market. And the eventual buyer of this inter-terrace at Perry Avenue, Perry Terrace is, so this is what the buyer did. So they actually purchased 3 years ago in 2021. They purchased a 4-bidder in the OCR, a very sizable 4+ study, so 1356 square feet, and they bought back then in 2021 at 2 million.
So that was a new launch.
Yeah, and that was a new launch then. Recently, this project just TOP'd. But back then when they bought, they intentionally bought a 4-bedroom because they had the intention, or they had that foresight to want to enter the landed market already.
Correct.
So these types of buyers, they don't really buy, they're not buying into a landed for utilization per se, because they don't need the space, right? I mean, they don't have kids, it's just the two of them, they don't need space. But it's more for a store of value, or kind of like a forced savings for them even. They want to start early. They recognize the importance of starting early and building the equity early because of the game of leveraging. So that's when, you know, they can start to recycle funds. If they get bored of this house, or when plans change, they can switch, you know, they can leverage
to a higher asset class.
To a higher asset class. So increasingly buyers, younger buyers, we are seeing now are looking into these kind of strategies and options. So what they did was they bought a bigger 4-bidder back then, the new launch, so that they can potentially see a bigger sort of capital appreciation when it's time to exit and sell. So this year in 2024, this is the valuation now of the unit. So it's at 2.9 million at 2138 PSF. So they're sitting on a gain now about 900,000. And using this gain, this 900K, can be easily funneled into their upgrading and their down payment, the purchase for their inter-terrace. So that's exactly what they did. So over here, basically, we're just breaking down the down payment between a 4-bidder at 2.9 million in today's market versus a $3.8 million inter-terrace. And so what they did is they used their cash proceeds basically to speed up their entry into the landed market, and it makes it a lot more accessible for them. So this is how they built their portfolio to make that quantum leap now, because like George mentioned earlier and Melvin mentioned earlier, increasingly it's going to be more difficult to make that quantum leap into the market. So this is one strategy that that one of our clients employed.
So I would say in terms of this strategy is a springboard kind of effect where you buy into a potential growth property first, of course within your means, and then knowing very clearly the objective is to move into a landed, and then, you know, they buy into, I would say, a bigger unit, naturally bigger unit, higher capital appreciation, and then after that springboard to their eventual goal of owning a landed.
So the next strategy of expansion is this one that we want to talk about. Entering in at a low quantum, a Cat 1 home, so a home meant for rebuild, and buying and holding, and basically the different strategies that you can employ when you're buying into an older a home that's actually meant for redevelopment or rebuilding.